Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 17th of December, 2019, just after 4:30 p.m. Central Time. Well, you put your right foot in, you put your left foot out, so I was half right, half wrong in stock indices. I thought today would be a Tuesday reversal day, and very frankly, most of the day was spent fighting a rally. It broke early last night, but then the market was coming back. But by the end of the day, my thought process wasn't wrong. It was one of these quiet sessions. Now, we've been, of course, during the day watching the House proceedings as they're getting ready to vote tomorrow on impeachment. The good news is a spending bill has been done. Looks like it's passed. A defense bill's been done. USMCA is going to be voted on this Thursday by the House of Representatives. Sounds like the president's about to sign a lot of this into order, and none of that is bearish in its nature. Yeah, the impeachment, we have to deal with that, but it's a known factor, and we'll deal with that come January. So now the question is the market able to hold here and get that full Santa Claus end of the year part going? Frankly, it's been a Santa Claus year. I think you realize that. Gold pretty steady, dollar index up a little. The market that got smashed, the British pound today in the financials, and that's because Boris Johnson is saying, hey, he's not going to go into a protracted extension with the European Union on a trade deal. Basically put everybody on notice that he expects this to be done a year from now. Whether it can or can't, don't know, but it took the air out of that market, and we saw that coming when you lost the embedded reading yesterday, and it followed through today. In the energy market, it's just looking at the world getting all these good trade deals done. We're watching U.S. home permits hit a 12.5-year high today. Gives markets a bid. Grain market hoping to get more detail on the U.S.-Chinese grain trade, but it's sounding better and better, so that's what you have. And when you look at the market, you can't argue that on a weekly basis, at least so far, and this is only Tuesday, we're up another 19 points, and this is a new all-time high close. When we take a look at where the market, by the way, that's on the weekly. Now, when you come here on the daily, you can see you had a small reversal in the chart. You got up and you fell back a touch. I expected a pullback, and you'll get to why, being that a strong Monday, where are you at in relation to the Bollinger Bands? But let's first do the first part. This is that same chart without, and this is without the swing line. When I put the swing lines on, I got higher lows and higher highs. Therefore, that's still very much the definition of an uptrend. In fact, you'd have to take out 31.18 to negate the pattern of higher lows, higher highs. Where you're at in relation to the 18-day average, it's climbing every day. And it's climbing at the tune of about 3 to 5 points a day. So tomorrow it's going to be closer to 31.45. That's my guess on it. And that puts it nicely away from getting underneath this 31.18. In other words, the first challenge of the 18-day average, I would assume, it doesn't mean I'm right, that that'll be something of a support zone. For the resistance, I'm looking at how many days you were up and over the upper Bollinger Band. So I was looking at the market today. You finished 31.95, under the 31.99 level. Yesterday you were over the band. The day before you were just under the band. The day before over. So you're fighting at that band is all that's going on. There's nothing excessive. And the market is very overbought, but B-U-T. What do we have now? Both numbers over 80 today. Both over 80 yesterday, not the day before. That was Friday. So if you're going to get what I call an embedded reading, where you convert the market from being overbought to locking in another potential wave, tomorrow's the very important day to me. So I'll be looking at it hard tomorrow. NASDAQ, overbought. Let's first look at the slow stochastics. Both numbers over 80. Both yesterday over 80, not the day before. Same scenario. If you're going to embed, tomorrow's the big day. But until you embed, you're the most overbought. when you're going up to do that. When you're going down to embed, a bearish embedded, you're the most oversold. Keep that in the back of your mind and look where you're fighting the battle, right at that upper Bollinger Band. When we come to the Dow Jones, just plain overbought. Market ran into its buzzsaw, if you will, at the upper Bollinger Band 3 days ago, and it's just sort of settling back a little. It's still very much in the bull camp, but it is overbought. And when we come to the Russell, we have a market that has the embedded reading. It's had it now for a few days, so I am continuing to look for support on breaks in this market, and when you lose the embedded reading, I'll have a different tune. So when the red line closes back under the 80 level, I'll change my attitude. Until then, I expect the pros to still be buying the market, but out if they lose that embedded reading. In the VIX, a pause. That's all you did today. I still am looking for this market to see, can it run to the lower Bollinger Band? It's been coming down from the basically 18 level down to 1063. This is a low level. The lower it goes, it's just telling you people are very, very complacent about risk. They don't think there's a lot of risk in this market, and until you get a bump in that, that's how the market seems to stay. In the T-bond market, the trend is down. You have a pattern of lower highs, lower lows. Now, you got ahead of yourself a little bit 2 days ago when you got into this first challenge of that Bollinger Band. But now what the market has been doing both Friday, Monday, and Tuesday is it's gotten over it, and the question is, does it want to lean back on it? The trend is down until the market takes out yesterday's high. Yesterday's high in the market, by the way, 158.2. So that would negate the downtrend. Until then, you're still looking lower. Are you oversold? Yep. This is the flip-flop of the stocks. You have a 27 reading, but both numbers are not under 30. Therefore, it's just oversold, not trying to embed. You did the same thing in the 10-year notes, and the trend is down. You have the lower highs on the swing line, lower lows. In the same manner, you're oversold, not pushing to try to convert from oversold to embedding, but a downtrend. When I step over to TLT, it's the same pattern. You're oversold, you're in a downtrend, you're finding support at the lower Bollinger Band, but until the market gets over this high here of 139.61, who's controlling the market? The bears are. Problem is, in an oversold market, do they have the wherewithal at this time of year to slam the market down, or is this going to be one of these pause areas? In the dollar index, we have a pattern of lower highs, lower lows, bearish. Oversold condition. The market first challenged the Bollinger Band here, has been able to continue to move to the right-hand side and break off of that. It's interesting, but it's so oversold. What do you do with that? In the eurocurrency, we have a pattern now of higher lows with today's action, higher highs. And if you look at this, when the market was coming up, the first challenge stopped at the 100-day average in the upper Bollinger Band. Then you snuck through that. But as you've done that, you keep coming back to that 100-day average in green and playing a game between it and the Bollinger Band. The bulls lose control of the market, in my opinion, if you take out the lows of yesterday, which was 111.91.5. So that's the number I don't want to see taken out. In the British pound, the tip-off was right here when you lost the embedded reading. Did we lose it on Friday? No. You lost it Monday. If you lose it often, the word is not always. Often it means the price in the 18-day average, unless you gain it back right away, and I mean the very next day right away, it's often a sign that price and the 18-day average are going to make a run at each other. And that's just what's going on. So it's a warning sign for those that are long. Maybe you take some money off the table. I don't know if you take your whole position. That's up to you. But it's certainly a warning sign that I pay close attention to. In the Japanese yen, lower highs, lower lows, certainly oversold. First challenge of the Bollinger Band has found support at that, but the trend is certainly to the downside. People aren't going for the safe havens right now. In Bitcoin, are you going to be able to break through this with any real power and break through these lows we made back here? You're down to the Bollinger Band. You're finished 65.80, just under the 67.53 zone. The pattern has maintained itself, what, with downside bias under the 18-day average. this has not, in my opinion, been a very good Christmas for these crypto currencies. We'll see if they can do more later. In the Brent versus WTI crude, it's just drifting at this 523 differential. The trend is still certainly bullish. And if we look at the slow stochastics, both numbers are over 80 today, both over 80 yesterday, both the day before, both the day before. So what am I going to tell you? The trend converted to bullish. On pullbacks, the market, I think, gets bought, and then traders are pumping out against the upper Bollinger Band, playing those moves back and forth here. Same goes for the WTI crude. So they're both bullish. They've been over their 18-day average of closes. That's been your bias sign not to be playing it from the short side as I see it. That's the way that I teach charting. I'm always looking for filters, and the reason is I'm looking for reasons not to make a trade. And I realize for most of you, you want to be in the market all the time, and that's great. You can go intraday. There's so many things you can do. But as I'm looking at what I call these swing type trades, I'm looking for filters because at best, I know that I'm going to be wrong enough, and you got to, in this game, you look like Swiss cheese. You got so many holes, you've been wrong. It's money management control. It's playing the percentages. It's not fighting what you teach and what you've learned over the years. And I'm still seeing higher lows, higher highs, overbought condition, a warning sign. Market coming up here, and of course we've got the Christmas, so to speak, driving in different parts of the country going on. I'll be hitting the road myself. In the nat gas, higher lows, higher highs. I'm looking at this as a contra-trend rally. The big rallies to the big move has been to the downside. Resistance pretty solid here in the 237 area, and there's still plenty of supply. Now we'll see more about that this week, and I'm going to be writing in a few minutes looking at the API numbers because they are important at this time of the year. So's the EIA in the morning for the crude, and then Thursday we'll be getting the gas numbers. But gas stocks are plentiful. We've had cold weather, and it's not moving the market that much. So interesting time. One of the things I look during the day, sometimes in the morning, like this morning for my subscribers, if you looked at your morning subscriber video, I went through the pivot point because I was looking at, of all things, the sugar market. And I said this market, like the British pound, is offering a reason the market could make a run back to the 18-day average of closes. So I teach you the formula. It's a 3-part video. It's free, by the way. I teach you the formula. I teach you how to plot them on the chart. You don't have to do it manually. Every good charting service I'm aware of carries pivot point formulas. Some are more expanded than others even. But you're looking for that neutral number, and then resistance points maybe where you're either coming out of longs, you're trying to play the short side of the market, or trying to buy the market at the support zones. I tie it together different than a lot of traders. I tie it together also with my slow stochastics. So I'm teaching you how to use them on, you could do it on 5-minute charts, 15, whatever your preference is. I know how I use them, and I show you what I'm doing in them. And as I said, they're videos. How do you get them? And it's free. Go to our website. On the bottom right, it says Ira's free offers. Click on that, and away you go. Just fill out the ones that you want. We'll get them to you. You can click up here. If you're watching me on YouTube, it'll take you to that page, or the old-fashioned way where you're going to get it right away. Call my staff during the trading day. They will talk to you. They will have it out to you in all of a minute or two. It's video links, and you'll be playing them like that. I'm Ira Epstein. You have a good evening. I will talk to you in the morning.